Good morning, everybody. Today is the 20th day in the month of January 2022. My name is Heritage Adisa, market analyst at HotForex. And quickly we'll check through the markets, see what the dominant sentiment is, see if the opportunities, and then how we can take advantage of it. But please always remember that this is just a communication material, and nothing in this communication should be considered as investment advice or investment recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and any investment of this nature involves a high level of risk for which users are solely responsible and liable. What we have this morning in terms of the overall market environment, right, is a more mixed start to the day. Yes, we could say equities are ticking higher in the day intraday. Right, you look across board, this is the US 500. Right, you look across board in today's session, right? This is today 20th of, let me drop this line a bit. This is today 20th of January. Here we could see they're ticking higher, net change about 0.33% currently on the day. And if you look across other other equities as well. In today's session, we've seen that tick high, right? Yes, we could look at the FTSE, for example, in today's session, another tick higher. I just load up, all right, and that tick higher in today's session across board generally. So we could look at equities as being more positive now, but on the balance of things, looking at how things have been playing out over the last couple of sessions, this is much more of a pullback rather than even tick highs. I don't want to see it as an upside, considering all the kinds of moves that we've had all week. For example, now if you look at over the last couple of sessions, we've seen that continuous, pullback. Yes, we could say it's a pullback from the overall trend that we've had, but we've continued to break key levels. First of all, we broke the 50-day moving average, broke the 100-day moving average, especially on the US 500. We've broken, key previous resistance, the high of October, of August 2021. That was the previous high of the year, right? Was retested again as support. So key level there, we've broken it down to the downside, and now we're retesting that area from below, right? And now you can see some level of that, and then further pushes downside. Now, this is seen as more of a pullback, and I think there is still much more vulnerability when it comes to, the equity space, right? The reasons why we've seen this, vulnerability in recent time, just in pullbacks recently from equities, rising bond yields have also been one of the core, causes with everybody talking about, rising yields as a major worry. Well, it could be as on the back of, the US Federal Reserve looking to hike rates. Obviously, that is pushing yields up, pushing the dollar up. But obviously, increase in interest rate is not good for equities. So that could be one of the reasons why we're having all of this. But it's something I want to be very, very attentive to, and then we want to be very watchful about. So in the equity space, intraday, we're seeing slight ticks higher, net change higher, definitely on the day. But on the balance of things, we're seeing more of a downside. So that means that you want to be very, 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 very watchful, as we are in a very vulnerable, market environment so far, right? If sentiment continues to deteriorate, this is a good level to see further downside from here. We are well below, the 50-hour moving average as well as the 100-hour moving average as well. So there's something you also very, very watchful about. And even for the week, we're down over 2%. Right, for the month, we're already down over 4%. That tells you a lot about what we're having in terms of the current price action that we're seeing. On the VIX side, yes, we're still keeping elevated. Yes, intraday, we've seen some pullbacks, but on the balance of things, over the last couple of sessions, we've seen massive pushes to the upside, and that is way above the 20 level that we use as barometer, way above the 100-hour moving average and even the 50-hour moving average on this particular one. Says there's still a lot of fear in markets, and then it means that you should still be very, very watchful. Where we're trading at currently, right, is the previous high. So we can also look at this as also another area of interest. If we keep above this level, if we can break this level out to the upside, clear out this level to the upside, then there's massive trouble ahead for equities. But if we keep below this upside, this level that we're seeing right now, obviously was key, was a key level of resistance before. Keep below this, then we could see some reprieve for equities on that particular front. The oil side, now, yes, in as much as we've talked about oil in recent times, saying oil has been elevated on the back of supply constraints, right? We had that gap early in yesterday's session on the back of the explosion with the Iraqi pipeline to Turkey, right? Yes, we had that, but later when we had reports that it would be fixed soonest or earnest, right? We had that pullback, and later in the session, when the American session was online as well, we had that massive flush to the downside. Now, for oil, yes, there is still worries in terms of supply constraints. Yes, we could still see overall elevated, oil prices are still one that's very, very supportive for bulls. But we've seen pullbacks, number one. We've cleared out the 50, in this case, 50 hourly moving average. right? We are back around the 100. We tested the 100, tried to keep the 100, but now we are trading below the 100. But one thing that's also interesting is we're still well above this overall support level around 83. You see, around 83, 84 level, around this $84 per barrel level. Now, this level is interesting because apart from the fact there was a resistance going back to the 14th, 17th of January, it was also a key level going back way back in middle of towards the end of last year, around October 2021. So that's also a key level. If we can keep overall above this level, obviously bulls are still in control, right? On the daily time frame, we can see that we're still well above the hourly and the daily moving average, 50 and 100. So as long as we keep above this levels, we could say that bulls are still in control. A bounce of this level would be nice. But because sentiment, certainly with equities, have been really fragile, really vulnerable in recent time, really down in recent time, right? That is still a cause of worry for oil because oil is also a risk asset. If equities continue to go lower, sentiment continues to be negative, obviously we could see further downside on this particular front. And it wouldn't really change the overall bias we have in, in something like oil. It wouldn't change the overall bias we have something like oil. Obviously, pullbacks, I mean, are not still, ruled out. If you draw a Fibonacci, for example, from the lows of December 2020, 21, right? If you draw a Fibonacci from that level to the highs, right? Right now, we still have the 23.6. We've not even gotten to 23.6 level retracement level. So, I mean, even further pullbacks from here would not still, take the bulls out of the equation, but still want to watch out for, still want to be very watchful and guided about. For the bond market, we are still seeing overall pressure in the bond market generally, right? And this has been on the back of rising yields because of expectations of, faster rate hikes for the Federal Reserve. Some people even calling for one in their next meeting, right? Well, some come for some as early as March, and then some are even calling for as much as 3 to 4 rate hikes even for the year. Now, all of that has seen the bond market push lower, has seen yields push higher, right? So right now we're still seeing this for intraday, right? We're seeing nothing much in terms of price action. I mean, we're still seeing more of a mixed bag here. I mean, this is not something that, it just more or less highlights the mixed environment that we're having in market so far. So that's another thing to also watch out for. For the dollar index. Now, for the dollar index, yes, we having bond yields rise, we should see the dollar follow suit as much as well. What we've seen is, yes, starting the week, upside, we've seen more pullbacks from the week as well. And then yields are still much supported. So that still puts or begs the question that how is the dollar even reacting to what we have currently? I mean, over time, we were struggling in the range for a while. We cleared it out to the downside. Now we've tested that, and now we're looking very vulnerable on this from a technical perspective. And if you also look at this, with this looking lower downside, equities pushing lower, but yields still pushing higher. It puts a lot of moving parts in the market and a lot of disconnect in terms of what we are seeing in the different asset classes. So I want to also be very watchful of that. Yes, sentiment generally is mixed. I don't want to just be very forward into markets. I mean, it's not just about trades, it's about taking the best trade. So for now, I'm not seeing anything really solid, high conviction that I really want to jump in when I look at the overall sentiment and what the different asset classes are doing so far. On the FX space, now, this is an interesting one because for the FX, we're seeing Aussie leading the FX majors on the back of data we had released earlier. We had employment data for Australia. Unemployment rate was below expectations by difference 0.3%. And we also had employment change also, more like double our consensus expectation on this particular one, right? Yes, participation rate dropped, but still overall on balance, it's still a better print. Now, yes, this is keeping the Aussie supported. But one thing I want to also note about this particular data is this data was pre-Omicron breakout in Australia, right? And because of that, subsequent data will reflect the effect of the Omicron strain, the restrictions and the lockdowns that we had in Australia. Now, late, December, as well as early January. So that is also something you want to also be very watchful about. So yes, it's a positive input. We're seeing Aussie, jump on the back of that. But once market wake up to the fact that that is just one of, because subsequent data would show more negative, data or negative prints, equities start turning lower as well. We could see Aussie move away from the top of the majors. But for now, Aussie is leading. And then on the other hand, we have, NZD lagging amongst major FX. So that more or less still highlights, the mixed environment that we have so far in markets, right? If you want to look at this, there are a couple of currency pairs that are still interesting, right? Despite the more mixed environment, right? We could look at currency pairs like, just give me a second. I think I had this written earlier. Strengths and weaknesses. We have Aussie leading the FX majors. The Euro also starts supported. We have the CHF also supported as well. And then on the other hand, we have NZD lagging. We have JPY lagging, CFAVs lagging, as well as high beta currency. And then high beta currency strengthening as well as the CFAV currency. So that still more or less, puts the mixed environments very much in play. But if I'm going to look at this, quickly looking at Aussie and Kiwi, just quickly. Yes, on the balance of things, I mean, we're talking about both high beta currencies, both commodity currencies, both cyclical currencies as well. We're talking about the antipodians being on or should behave in one way or should behave alike in a certain market environment. But currently, Aussie is leading, Kiwi is lagging, right? And that's what we're seeing today's session. Aussie Kiwi jumping up to the upside, up about, let's see, how many percent so far on this? Up about 0.52% on this particular one. But one thing I want to also draw our minds to or call our attention to is for the last couple of sessions, we've really been trading the range on this particular one, right? And in terms of central bank divergence, we still expect the NZD, the RBNZ to hike rates even faster, way faster than the RBA. Even though, yes, they're starting to, come around, but in terms of, first of all, NZD have hiked rates about twice, back to back, right? And they're still expecting for more and more hikes going forward. So yes, we have that, right? Fundamental biases, NZD is on the leading side compared to the AUD, right? So on a longer term basis, I say expect further downside on this particular pair. But what we are seeing currently, right? The pair has really moved up and has broken through, even this previous low around 1.065 level as well. So I want to still be very watchful about this one. In terms of shorter term sentiment, yes, it's interesting. Technically, we've broken above this key rate. We could look for a retest, look for further upside. But even with that, we still need to be very watchful about what the central banks even do in terms of longer term biases. But for now, it's what we are saying. If you look at AUD JPY, also an interesting one to look out for. Yes, sentiment is more or less fragile. Over the last couple of sessions, we've seen more of mixed ranging price action. But even with all of that, currently we are heading towards this key level. If you just look at this, first of all, we've cleared out. Give me a second. Let me clear this out. Delete. All right. First of all, we've cleared out this overhead resistance around here. Just quickly, just to call your attention. As long as equities remain vulnerable, obviously you expect Aussie to suffer against JPY. But the problem now is with yields rising, it also still puts pressure on JPY. So they're both still having mixed flows into them. But if I want to just talk about this quickly, as long as we keep above this support level, this should be the level to watch out for. If you keep above it, yes, the moving averages are not helping matters, but if you keep above it, maybe clear out the moving average to the upside. I think bulls would still like this because on the balance of things from the central bank side, Aussie is still a lot higher, compared to the JPY. But if equities keep being pressured and we clear this level to the downside, I mean, there is a lot of room to the downside on this particular one. So that's still another thing to watch. Be watchful about. Now we're going to leave it at that for now. Mixed environment, Aussie leading, Kiwi lagging, high beta FX and silver currencies are not behaving alike or the way they should in a certain market environment, which further highlights the mixed environment that we have, right? And on the calendar, it's still really a light one for the day ahead. We're not really expecting so much after Aussie. We're not expecting so much going on. From the Chinese side as well, we had them cut interest rates, right? Early in the session. That's something I was watchful about. And this is one of the reasons why we saw equities see some reprieve, right? Because it more or less makes it easy for businesses, businesses. And this is one of the major economies in terms of biggest economies in the world, the second biggest in the world. So obviously, when there is more ease coming from that particular aspect, obviously to spill over to the rest of the world. So that's one of the reasons why we're seeing equities, see some reprieve on the day. But apart from this, we're not having so much going on. Yes, inflation numbers for Eurozone, but not expecting so much. Expectations just as previous, right? So I don't expect so much from this one as well. Unemployment claims for the US also interesting, but I don't expect this to also cause any fireworks or any major changes to the Federal Reserve outlook. Apart from that, really nothing major on the calendar. So we're going to keep a very close eye on sentiment. If it keeps being mixed, we could still see markets really move very disjointed in the day ahead. But apart from that, it's going to be very light one on the calendar. Want to be very careful, watchful. If we see opportunities or we see sentiment later, deteriorate even further, then we can see further downside for likes of NZD. And if oil continues to push lower, further downside for the CAD. So that's it for now. Thank you very much. If you have any questions, please do not hesitate to ask, and we'll always do our best to help. Thank you. Do enjoy the rest of the trading session. Goodbye for now.